Welcome to Arizona Mortgage News Update. I'm Mike Goblet, your Arizona mortgage guru. You know, the old adage that March comes in like a lion and goes out like a lamb may be true for the weather, but it certainly isn't going to be true for mortgage-backed securities or mortgage rates. March started fairly calm like a lamb with mortgage rates remaining near historic lows. But last week the lion roared and mortgage-backed securities really traded from Tuesdays to Thursdays within a differential of 150 basis points. And that's quite a big difference in that short period of time. They ended the week down from where they started the week. Not quite as bad as that 150 basis points difference, but still a measurable difference. So what should we expect now? What will this last week of March bring us? Well, there are two important factors to watch this week. One is the Fed is stopping purchasing at the end of this month of the mortgage-backed securities. So that market will lose its biggest purchasers of mortgage-backed securities. Number two, at the end of the week, technically April, but the jobs report come out. And the forecast is for a big improvement in the jobs number. That will have an impact of a very positive effect on the stock market if that indeed becomes the case. And because mortgage-backed securities compete in the stock market against regular trading stocks, the only way that they can attract investors if the stock market is going up very positive area is by increasing the yield to the investors. And the only way to increase the yield is to increase the rates. So if you've been thinking about doing anything in terms of refinancing or purchasing, it's better to act now than later, because the expectation, as we've been saying for quite a while, is that rates will continue to rise. We're still in the 5% area right now, and that's really good. But I think you can begin to see that begin to climb. I'd also like to take a moment and tell you about an exciting new product that's back in the marketplace. It's called the Homeownership Accelerator, and it's a unique loan program that actually allows you to pay off your mortgage in about half the time of a traditional 30-year fixed-rate mortgage without any change in your spending habits. How does it do this? It does it by paying principal first. It's a very unique mortgage that allows you to pay on principal before you make interest payments. And that has an incredible impact of minimizing the amount of interest you pay on the loan. Now, it's not a quirky loan. It's not a high-risk loan. It's just a very unique loan that most banks don't offer. In fact, there's really only one lender or bank that does, and we have that lender. Again, it's called the Homeownership Accelerator, and if you want to know how unique it is, actually the rate on this loan right now is 3.5%. Yes, it is an ARM, okay? It's not a 30-year fix, but because you're paying principal first, you need to change your focus of how this loan works. I hope you'll come back again to our site, not only to learn about the mortgage news updates, but to get great new loan products, the type of guidance and security and strategizing that you're looking for when it comes to your mortgage. A mortgage is an asset management tool, and it isn't always just about what's the lowest rate and the lowest fees. It needs to fit your mortgage needs. I'm Mike Goblet with United Mortgage Financial Group, your Arizona mortgage guru. And remember, Arizona is always a cool place to be, even when the weather isn't. Thanks, and come again.